Got further weakness in crude oil. But before we go further, a quick word from our sponsor. This video is brought to you by XNES, the world's largest retail broker offering ultra-fast execution with no overnight fees. Find a link in the description below. This is Bruce for FXEmpire taking a look at the daily chart in crude oil. So crude oil has been consolidating for the past 9 days or so around support of the purple 20 moving average and resistance of the orange 50 moving average. That resistance was specifically tested yesterday with a sharp rally partially through that line, but the seller subsequently took charge and drove the price all the way down below the prior day's low and at a close near the low of the day, establishing a bearish shooting star candlestick pattern that followed through today, at least a little bit. And keep that shooting star is contained within this consolidation. So it's not as significant as if it was like up here at a high, for example. So nevertheless, it is bearish short term. So what does that mean? Well, it depends on what happens next, really, because we have the lows of this range is here at 60.55. That would be support. If it's broken, then that opens up a possible test of support around the 59.91 price level, the 50% retracement, or the 61.8% Fib retracement at 58.95. So we do have a series of lower swing highs, including this week. But there is an attempt being made to establish some type of bottom indicated by a higher swing low and a rally above the 20 and staying above the 20. So now on the upside, unfortunately, unless there's a breakout above this week's high of 64.67, we can't say there's a continuation of this trend. And significantly, potentially, that breakout was a weekly breakout. It was a breakout of a 3-week high right here. And so far it has failed and is setting up a potential bearish weekly candlestick pattern. Nevertheless, unless there's a trigger to the bottom, it doesn't mean anything yet. We could use last week's high and the weekly high we're referring to here at 64.06 as a price level on the upside. So if it's broken, that would be a bullish sign confirmed on a close above that high, and then further on a rally above this week's high. But right now, it looks like more consolidation for crude before it's going to get moving again, if that is what is going to happen. One of the reasons I think it's going to go up is because we have significant strong support down here, indicated by another number of indicators, which I've talked about in the past. And the angle of descent is at the extreme. It shows exhaustion. It's almost straight up and down, and represented, we could say, by, well, actually, I could throw another trend line here with this angle right there. It was here, right? Now it's here. So we have this fan effect. And once we get to the extreme, the probability of moving in the other direction increases. We're not seeing confirmation of that, but that is what's anticipated. All right, that is it for crude oil traders. Have a great Friday.